Hello everyone, welcome back to the video. Uh, Today we are going to discuss about one topic from Goodwill chapter, which is also very important these days when it comes to the board exam perspective. Without further delay, let us jump into the question, along with which we will discuss the topic in detail. As you can see on the screen, this is the question. Uh, Calculate goodwill of a firm on the basis of 3 years purchase of the weighted average profit of the last 4 years. The profits of the last 4 years were, they are saying about last 4 years profits and asking us to calculate goodwill of a firm on the basis of 3 years purchase of the weighted average profit of the last 4 years. So from this we can draw certain conclusions. That is one thing, that is we have to follow weighted average profit method, and second is 3 years purchase, third is weighted average profit should be calculated for 4 years. So all of you must be aware by now about the weighted average profit method. What is weighted average profit method? In that, in order to calculate goodwill, first we need to calculate weighted average profit. How to calculate weighted average profit? Some years and some profits will be given, you just, and some rankings will be given. It may be given in the question, or you may have to put some random rankings like 1 2 3 4, and you will multiply each year's profit with that respective ranks. Then you will get a total product. That product is basically known as weighted profit. That weighted profit you have to sum it up, so you will get weighted total weighted profit. That total weighted profit divided by the total number of weight. Weight is basically the ranks that you are giving. Similarly, you have done questions in statistics in 11th economics. As a part of statistics, you have done weighted method, okay, weighted average method. Same thing we are doing for the purpose of goodwill, okay, or similar thing we are doing for the purpose of goodwill. So there is nothing much of a difference there. The problem is with this, below this question they have given two statements. Okay, first one is, on 1st April 2020 a major planned repair was undertaken for 10,000 which was charged to revenue. When they say something was charged to revenue, basically it means that when they are preparing profit and loss account, they have written it as an expense. That is the meaning of this one. It was charged to revenue, it is treated as an expense. Okay, next is, the said sum is to be capitalized for goodwill calculation subject to the adjustment of depreciation of 10% on reducing balance method. All of you are expert in depreciation chapter, I hope. So last year you have studied depreciation. So when you are calculating depreciation, there are basically two methods. One is straight line method, second is reducing balance method, which is also known as written down value method. Same like straight line method, okay, same like straight line method has another name. What is another name? Fixed installment method, right? Similar to that, reducing balance method is the other name of written down value method, which you already studied. What is the speciality of written down value method? Every year, whatever asset is remaining after reducing the depreciation of the previous year, on that amount only we will be calculating the depreciation. Okay, we'll come to that soon. Now, why we are discussing all these things is that they have made a mistake. Okay, while calculating, that means on 1st April 2020, while a major plant repair was undertaken for 10,000. You just observe the date, 1st April 2020. 1st April 2020 means out of these years which are given, all these years you can see one thing in common, ending 31st March. So 31st March 2020, 31st March 2021, 31st March 2022, 31st March 2023 is given. Here 1st April 2020 is given. It belongs to which year? If I ask you, it belongs to which year? 1st April 2020 belongs to this 2020 which is written here, 2021 which is written here, 2022 which is written here, or 2023 which is written here. This year 1st April 2020 ends on which date? 31st March 2021. That means the mistake that they have done here happened in this year. I mean, this year onwards the impact of the mistake is there in all the profits that we have calculated. Why this year 2021? How I say that it is this year that we made the mistake? Because 1st April 2020, if you make a mistake, it will be reflected in the profit of that year ending. That year ending profit is what? That means when you calculate the profit of that year ending, or that year, it will come on 31st March 2021. That means 2021, which is mentioned here, that is year ending 31st March 2020. This is the year in which we made this mistake. What is the mistake that we made? You must be thinking like, I'm always saying mistake, mistake, mistake. Where is the mistake here? Here the mistake is because of this word. A major planned repair was undertaken for 10,000, which was charged to revenue. When you normally think repairs is a normal expense only, what is wrong with writing it in the profit and loss account? Here the problem is they are talking about major planned repair. When they use the word major planned repair, it means that it is an amount that should be added to the asset account instead of recording it as expense in profit and loss account. Okay, basically in other words we can say like this: major planned repair is a capital expenditure. Okay, and it should be, so whenever you are spending some capital expenditure, it will increase the asset. Just imagine that you are purchasing a machine, okay, and you are spending 20,000 for installation of the same machine. So what will you do with that amount, 20,000? Obviously with the original price of the machine you will add that 20,000. So totally when you write in asset account, 1,20,000 will be written as the value of the asset, which you have already studied in last year, especially in depreciation chapter. When you prepare fixed asset account and all, you used to follow this method only. So basically that 20,000, why we are adding it? Because it is a capital expenditure. Clear? Similarly, here also we were supposed to add this 10,000 to the asset account as a capital expenditure, but instead of that we wrote it as a revenue expenditure. That is why, that is what the meaning of was charged to revenue. In when you are writing something as an expense in profit and loss account, you are taking it as a revenue expenditure. Okay, so that is a mistake that we did. So we have to reverse it. From which year we have to reverse it? We have to reverse it from 2020. Okay, that is one thing. Okay, why do we have to reverse it? Okay, if I ask you such a question again, why do we have to reverse it? Because to calculate goodwill under any of the methods, we need the proper profit. That means here if we did a mistake and the profit went wrong, that is not a correct profit. So we need the actual profit, which can be also called as the normal profit. Okay, normal profit for calculating goodwill. So that is the purpose for which we need to reverse this amount. Okay, now coming to this depreciation, we will come to that soon. Okay, now I will just take you to the second adjustment. For the purpose of calculating goodwill, the company decided that the years ending 31/3/2020 and 31/3/2021 be weighted as one each. That means for the first 2 years, as I mentioned before, you already know that we have to give some rank or weight to each year. So when you are giving weights, first 2 years, 31/3/2020 and 31/3/2021, you should give the weightage as one each. That means first one is also one, second one is also one, and followed by the other 2 years, we have to give the weights as 2 and 3 respectively. That means 2 and 3 for 2 for 2022 and 3 for 2023. This is how you have to calculate the weighted average. So second adjustment is pretty easy. When you are calculating weighted average profit only, we need that adjustment. Now I will take your attention to the one table which we are using for calculating the normal profit or the actual profit that we are supposed to use for which one? The weighted average profit calculation, okay, or goodwill calculation. So here, as you can see here, I have mentioned 2020 year ended 31st March 2020, 21, 22, 23, and the same profit that is given in the question is given here or mentioned here: 28,000, 27,000, 46,900 and 53,810. So what I am going to do is, we will check in which year the mistake happened and we are going to reverse it. So which year the mistake happened? Obviously we have already discussed about it. Which year the mistake happened? That happened in 2021. So basically 2021, what mistake we did? We have already deducted 10,000 rupees as an expense. When you deduct something as an expense, in order to reverse it, what to do? We have to add 10,000. That is what I have done here. In the adjustment column, you can see adjustment is the column that I made for showing the calculations, how we are going to correct that mistake. Okay, so basically what are we doing here? We are adding back this 10,000. Why we are adding it back? Because we wrote it as an expense and we already deducted it while calculating the profit. When you are calculating profit, revenue minus expense only we are doing, right? So obviously if you wrote 10,000 as an expense, this 10,000 also must have been deducted. So that is the reason why I am just removing it. Clear? So we are reversing it, we are adding it back. Now the question is, from where this 1000 came? Just imagine that after adding this 10,000 back, what am I going to do? This 10,000 will be taken to which account? Okay, or after reversing this 10,000 in the profit and loss account, it should be added to which account? Obviously, you guessed it right. We have to add it to the whatever account, asset account is there, that account. With that account, we have to add. Which asset account we will add it here? We are adding to which account? Planned account. So when we will go back to planned account and we will add 10,000 there. So obviously, in planned account also there is a mistake that we made. What is the mistake? Without this 10,000, when you calculated the depreciation, then the depreciation that that is shown or calculated in the asset account, or the depreciation after calculating depreciation asset account, where it will be shown? It will go to profit and loss account. You know that profit and loss account is debited with depreciation, right? So the depreciation that is shown in profit and loss account is also not the correct amount. We have to calculate the correct amount. How to calculate the correct amount? Separately, for this 10,000 alone, we have to calculate depreciation for the upcoming 3 years, because remaining depreciation is correct only. Whatever asset is there in planned account, whatever value is written in planned account, depreciation for that value, whatever we have calculated is correct. But when you wrote depreciation in profit and loss account, you wrote depreciation only for that assets. That means the planned value which is there in planned account only we have calculated depreciation. So that means the depreciation that we wrote in profit and loss appropriation account, that amount is wrong. Some more depreciation should be there. How to calculate that extra depreciation? For that, we have to calculate depreciation on which amount only? The amount that is extra, which is going to profit and our planned account. Which amount is going to planned account extra? 10,000 only. So for that, I have done the calculation here. You can see here, first year depreciation. First year means it is not the first year in that 4 years. That is not what I am saying. Here, first year of the mistake. When is that happening? First year. You can see here, mistake happens on 2021. So 2021, 20 is the first year, 2022 is the second year, and 2023 is the third year. So that is the meaning of first year depreciation, second year depreciation, third year depreciation. First year, how to calculate depreciation? I told you, for this 10,000 only we have to calculate depreciation, because remaining depreciation they have calculated correctly only. So 10,000 extra amounts depreciation only we have to calculate. So 10,000 into how much? You know that rate of depreciation is 10%. So how much you will get? 1,000. What will we do with this 1,000? We will go back to the adjustment table, or this table where we used to where we are finding the correct profit. There we have to go and deduct it in which year? 2021, because 21 only mistake happened. Clear? That too, when we calculate depreciation, you have to keep one thing very important, that is in mind. You have to calculate depreciation on a time basis. Time basis means what? The date on which you started purchase that asset till the end of the year, you have to calculate the depreciation. Here what they are saying, on 1st April 2020 a major plant repair was done. That means 1st April onwards till the end of the year you have to calculate depreciation. So how many months depreciation we have to calculate? For the entire year. That is why I have calculated for the entire year by this formula. Basically it means like this: 10,000 into 10% into 12 by 12. What is the 12 by 12? 12 by 12 is the number of months. April 1 onwards till March 31st. So till this 12 by 12, which will give you 1. That is why I didn't mention it here especially in this calculation. So depreciation is a sum amount that we are calculated on the basis of time. So as we got 1,000, what are we supposed to do with this 1,000? We have to go back. We have to go back to our profit and loss account and we have to remove it. Remove it means what? Deduct it. That is why I have deducted how much? I have deducted this 1,000, because depreciation that is written in profit and loss account is less, because we were supposed to calculate depreciation for 10,000 also, but we didn't calculate that. So extra depreciation is coming, depreciation expense. So that extra expense also we have to remove it from the profit. That is why I removed 1,000. And finally in the last column you can see here as 36,000. That is this 27,000 plus 10,000 minus 1,000. As you can see here, 36,000 is there. Coming to next year. Next year, what is the mistake that I made? If 1 year, if I calculated depreciation wrongly, Next year also I have calculated depreciation wrongly. But on which amount? Only for this 10,000 depreciation is wrong. 10,000 depreciation is only not there in the profit and loss account. Remaining depreciation is already there. So next year onwards, only depreciation part we have to be concerned about. So next year, how to calculate depreciation? For that, I will again take your attention to this question. Which method we are following here? Reducing balance method. Reducing balance method means what? There will be one asset. From that asset, we have to remove the depreciation for the last year. Then you will get a value. On that value, you have to calculate the depreciation for this year. Basically, that means the asset value minus depreciation is basically known as book value. Once depreciation is deducted from an asset value, whatever value is remaining in that asset is called book value. So on that book value only we are calculating depreciation again and again. Under which method? Under reducing balance method. So when it comes to this, we can see here second year depreciation. Already 10,000 was the value of the asset which I increased, and in that already last year depreciation should be deducted. So how much is there? 9,000 is only remaining. On that 9,000 I have to calculate again depreciation, that will give you 900. Hope that is clear. So on last year's asset amount, I am doing what? I am deducting the depreciation, and that means depreciation of last year, and you are calculating. Now you will get one amount. That amount is called book value. On top of that book value, again we are calculating 10%, which is the rate of depreciation. 10%, you will get 900. That 900 again I will take back to which account or which table? This table which I prepared to find out the normal profit. Depreciation is something that we have to remove from the profit. That is why I am deducting 900 again. Similarly, for the third year, last year, this is the last year that we made the mistake, right? So last year, what are you supposed to do? First year it was 10,000. Again, first year's depreciation is gone from it. Now second year depreciation also should be gone from it. Until the last year, whatever depreciation is there, that should be deducted from it. Now the value of the asset is how much? Last year it was 9,000. Now its value is how much? 8,100. How 8,100? 10,000 minus 1,000 minus 900. So basically it will give us 8,100 again into 10%, which will give you 810. So that is the last year's depreciation, 810. Again what you are supposed to do? You have to go back to the table and reduce 810. So you will get 53,000. Similarly 46,000 in the 2022's column. Now that we got all these values, next step is to calculate the weighted average profit. Nothing else left because we got all the correct profits. So weighted average profit, how to calculate? We will create a table like this. First year column, second profit column. I have mentioned it as adjusted profit. Why I use the word adjusted? Because we have corrected some mistakes and found this profit. That is why it is called adjusted profit. Okay, you don't have to mention that, just to make you understand. I just mentioned that word. Then again weight is given. Weight already we discussed according to the question. First 2 years 1 1 and next remaining 2 years as 2 3. Now what are you supposed to do? 28,000. Each year's profit should be multiplied by the respective weights to get the weighted profit. So you can see 28,000 into 1 28,000, 36,000 into 1 36,000, 46,000 into 2 92,000, again 53,000 into 3 1,59,000. What are we supposed to do again? We are going to calculate weighted average profit. So weighted average profit formula is what? Weighted average profit equals total weighted profit divided by total weight. Total weighted profit is how much? 3,15,000 divided by total weight 7. So answer will give, that will give you, the answer that you will get will be rupees 45,000. What is this? Weighted average profit. Question is not to calculate weighted average profit. Question is to calculate goodwill of the firm. So how to calculate goodwill of the firm? Already you are aware of the formula. Weighted average profit into number of years purchase. What is the number of years purchase given in the question? 3 years, 3 years of purchase. Okay, 3 years purchase. That is given in the question. So basically into 3. 45,000 into 3, that will give you 1,35,000. Hope that made that concept clear. I wish you good luck for the upcoming exam preparations. Thank you.